Hi, welcome to Christensen Wealth Management. I'm Michael Christensen, and thanks for taking time out of your day to watch this weekly market update. Before I get into the charts and commentary, I would like to begin with the quote of the week. And this week's quote is from Chris Guillebeau. He is an American nonfiction author, blogger, and speaker who once said, "If Plan A fails, there are 25 more letters in the alphabet." Those are some very wise words from Chris Guillebeau. Well, talking about the economy, markets, and the world, starting off with the Trump tariffs and Turkey this week. Those are the words that I would say, other than some other volatility with a certain electric car maker that we know so well. But the Trump part and the tariffs part is Trump and Turkey are having a little standoff. And Trump decided on Friday to double the tariffs on Turkish steel and aluminum to 50% on steel and 20% on aluminum. And that compounded the already fragile economy and currency of Turkey, and it kind of went into a meltdown today on Friday. The Turkish stock market dropped very substantially, but the currency is kind of in free fall, and the Turkish lira is down 40% against the US dollar in the last 6 months. Here's a chart showing you that correlation. Dollar lira pair there. You can see the lira is falling pretty rapidly, and that's also going along with the emerging markets currency index, which is also in kind of a meltdown due to economic and tariff issues as well. You can see that chart here. A very substantial decline in emerging markets currencies. And that takes me to the US dollar. The US dollar is benefiting from this overseas chaos, and the dollar is rallying. So take a look at this chart of the US dollar. So you can see the dollar is the safe haven reserve currency of choice at the moment, looking pretty good. And that's also having an impact on our U.S. Treasury bonds. The interest rate on the 10-year Treasury bond is declining as people seek safe haven. You can see that chart of the 10-year Treasury interest rate right here. So that's what's going on in currencies and emerging markets in Turkey. European stocks did not like the meltdown in Turkey today. The German stock market was down about 2% in the DAX on Friday, and that also kind of was spilling over mostly into the German banks were very unhappy with the Turkish currency situation. So the U.S. stocks were down about 275 or so on the Dow for a while, paired some of its losses for the day on Friday. We'll see where we go next week. I'm looking at some bearishness, which I'll show you in a second on those charts. In addition to all that stuff, overseas, emerging markets, currencies, stocks, and stuff like that, we also have a new headline that us as Americans should be proud of. That is, U.S. spending on our national debt hits all-time high as budget deficit soars to $684 billion. So right now, we are spending more of our American tax money servicing the interest on our national debt than ever before in history. And it says the July deficit brought the cumulative 2018 budget deficit to over $684 billion during the first 10 months of the year, up 28% over the past year, which means that our budget deficit in this country is 28% higher than it was a year ago. So we're spending 28% more than we did in 2017 at this time. We should be proud that our debt continues to skyrocket. So anyway, with the sarcasm aside, let's go ahead and look at the U.S. stock market, because I think there is some very interesting things to point out. Let's look at the Dow Jones Industrial Average. Looking at this chart of the Dow Jones Industrial Average, you can see we've had a very significant rally from the low of June 27th, or you could say July 3rd, all the way up here. And the 5-day moving average in red is above the 20-day moving average in blue, indicating short-term strength. and the blue 20-day moving average is above the purple 50-day moving average, indicating intermediate term strength as well. The thing that gave me pause over the last several weeks to month is the fact that this whole rally was on very light trading volume, which means that there wasn't a whole lot of broad participation from buyers in this market. It was kind of a very half-hearted rally. And as of the 10th of August, when this is being recorded, it looks like we may have officially formed a top and have begun another leg down. We'll have to wait and see what happens the week of August 13th. But right now, everything is looking good on a short-term and intermediate-term basis. But the sell-off of the last 2 days or 3 days is giving me some concern. And we clearly have broken, let's see, back below the highs of June. So with that, the highs of June have been broken, and the highs of March have been broken back below. So caution is in the wind for the Dow Jones Industrial Average for the week of August 13th. Let's see where that takes us, and let's take a look at the S&P 500. In this chart of the S&P 500, you can see that it was or is stronger than the Dow Jones Industrial Average, because this rally really began on April 2nd and really just took off and went back up and almost tested the all-time highs of January 26th. Just like the Dow Jones, this entire rally that began on June 27th or July 3rd was on very light trading volume. As the market was heading higher, the volume was just not increasing, which meant that fewer and fewer people were buying stocks at these higher and higher prices, which is not, in my opinion, a sign of strength. And we got up here toward the all-time highs and then just rolled over on August 8th, 9th, and 10th. So we'll see where we go next week on August 13th. But we have a potential bearish wedge pattern here that I've talked about in prior videos. You can see that this here is the top, and then we've got the bottom from here, and that has been broken. I'll turn off those moving averages for you so you can see. Typically these bearish patterns resolve themselves about 3/4 of the way along the wedge, and surely that is exactly what we did. About 3/4 of the distance up here, we gave it up on the 10th of August, and I'm curious to see if we have a lot of follow-through the week of August 13th. So right now, putting those moving averages back on for you, we have the 5-day moving average in red above the 20-day moving average in blue, indicating short-term strength, and the blue 20-day moving average is above the purple 50, indicating intermediate term strength as well. So the moving averages are bullish, but the price action on the 8th, 9th, and 10th of August is concerning, and the chaos in emerging markets and Turkey, for example, may not be resolved by Monday. So just use caution when looking at the stock markets next week. Let's take a look at the NASDAQ 100. Here's a chart of the NASDAQ 100 stock index, and this we have the 5-day moving average in red above the blue 20-day moving average, indicating intermediate short-term strength, and the blue 20-day moving average is above the purple 50-day moving average, indicating intermediate term strength as well. This is clearly the strongest index of the bunch because it's full of all the high-flying technology stocks that have been in the news for most of the last several years. And right now it is turning down on the 10th of August and the 9th of August after trying to get up and make new highs and exceed those highs of July. But we may have run out of gas. This was a half-hearted attempt to go higher, and it just began to roll over pretty good on Friday the 10th. So we'll see if that can continue lower next week. That's the only thing that gives me caution, is the weakness in the volume of trading. but I am also concerned by the potential bearish wedge that I've outlined in the past. We have the top and we have the bottom of this pattern here, and I'll turn those moving averages off so you can see them. And typically these rising wedge patterns collapse on themselves after about 3/4 of the length of the pattern. We'll see if it in fact does that next week, but it is worth noting and watching. But right now the moving averages are bullish, but the price action on the 10th of August does give me some concern. So just some caution on the NASDAQ 100 going into the week of August 13th. And if I see anything worth mentioning, I will bring it to your attention in the days to come. Moving on to my favorite industry sector of the week, I'd like to first visit my prior favorite, which is now tied for my favorite, consumer staples. This is the S&P 500 Consumer Staples Index, and you can see it dropped 17% from the high of January 26th down to the first week of May. Went sideways for much of the month of May, and then broke out in this shaded yellow oval. And ever since the first week of June has just been in this beautiful uptrend, which is making me very happy. I can't say anything negative about consumer staples. Everything is strong. Everything is bullish right now. It looks great. But there is a new sector that has come to my attention that I am nominating or picking for my other favorite sector of the week, and that is the Telecommunications Index. You can see that telecommunications also went from the February 1st down to May 9th. It also lost 17% of its value. Went sideways for much of the month of May and June. And then if I draw a little bit of a line here, just to kind of indicate the trend, you can see that if you connect all the prior highs on this chart, or the downtrend highs, you can see that it broke out the last week of July and is really starting to accelerate to the upside. And I see a 5-day moving average moving rapidly to the upside above the 20-day moving average, indicating rapidly increasing short-term strength. And that 20-day moving average in blue is above the 50-day moving average, indicating intermediate term strength as well. So it's still probably about 12 to 15% below its prior high of February 1st, and it's moving to the upside. So telecommunications is looking really good and is tied for my favorite industry sector of the week. Thank you for watching this market update. Before you go, please do me a favor and click on the subscribe button on the YouTube channel, and then click the little bell next to it if you haven't done so already. The bell will allow you to be notified whenever additional videos are posted. And in the summary description of this video and in the top right-hand corner of Christensen Wealth Management, you will find links or icons for the Facebook, LinkedIn, and Twitter pages for Christensen Wealth Management. Please visit those if you haven't already, and like or follow those pages while you are there. That way, throughout the week, I can communicate with you on social media and through these videos. Well, I wish you another great week, and I'll talk to you again in another 5 to 7 days. Have a good day. Bye-bye.